let's begin the wrap-up early and then do a full preview of next week, which is very busy. So this is the wrap-up for the live market open of November 27th. It's Friday after Thanksgiving. We didn't have a lot of developments yesterday in markets. We had Japanese inflation coming out okay, still mediocre. German import prices disappointing year over year and month over month, weighing on expectations in general, but second-year figure. And Spanish flash CPI took a better course, came out better than expected. All in all, very quiet markets yesterday. Today is a bit more busy, and we have the big event of the day is the revision of UK GDP at 9:30. It's expected to remain unchanged at 0.5%. Another figure to watch is German consumer climate at 12 GMT. Both are not expected to rock the boat too much unless we have a big surprise in the UK. And in some figures for Canada at 1:30 GMT. All in all, we might have some action today, not because of these events, but because of some end-of-month fixings. Okay, we might have some last-minute adjustments. It's not the end of the month. We have another full day on Monday, but it's still Friday. It's the end of the week, so we might see some unusual activity. I don't think it'll be really, really extreme. Okay, so UK GDP is the main event for today. Let's talk about some charts. Euro dollar in range 105.66 to 106.30. Currently at 106.13. We've seen a small rise, but back down well within the range. Pound dollar. It was hit hard by Mark Carney this week for the second time, but still within range. 150.60 to 151.15. Dollar yen getting closer to support at 122.20. Double bottom here on the charts. Resistance at 122.75. Bigger lines to watch. 122 to the downside, close to 122.20, and 123.60 to the upside. Dollar CAD enjoyed some improvement in oil prices. Currently at 133.20. Support 132.80, resistance 132.70. Eyes are on the OPEC meeting next week. Oil prices have stabilized, but haven't really risen. The Aussie dollar was hit hard this week by private expenditure, but supported by the RBA. Lines to watch 72.80 and 71.50. All in all, relatively stable. Kiwi dollar even more stable at 65.50 in the middle of the range of 65 to 66.40. Okay, these are the main currency pairs to watch. Relatively, we're expecting busier day than yesterday, but perhaps a bit busier than we had. Busier than yesterday, but not extremely busy. Next week, it's much busier. I see, before we do the preview for next week, I see a few questions. Stock exchanges in the United States are giving 30% discount to central banks to buy stocks. What a scam. Yeah. You mean the fees, or? Anyway, I'm not following the US stock market that closely. Stocks, well, generally are quite stable in range. In S&P, if the ECB really does a lot of QE and cutting the negative deposit rate, it should be the first reaction should be first euro negative and stock positive, stocks here in the Eurozone, because the ECB is basically printing more money. So that's good for stocks and bad for the euro. Eventually, if the economies do improve and stocks go up, it will attract money back into the Eurozone, but that's not on the near-term scope, okay? Now,